700%. That's after a group of small investors took on large investors who had bet billions that its stock would fall. Small investors purchased Gamestop stock in viral posts online, and its stock surged in price. To talk more about this, global market analyst Phibion Makuwerere joins us from Dubai. Phibion, I mean, it was just quite extraordinary watching what was happening, unprecedented. Tell us what happened and how this worked.
Thanks for having me. So we are sort of witnessing a David Goliath type theme, where pretty much the smart money was outdone by the dumb money. And this has been it's unheard of, really. It's something novel that we are witnessing. And basically, what happened is that investors on the social in America on the social platform Reddit managed to draw a lot of other investors. They've been sharing messages on the platform for a while, and then when they realized that there's potential for a short squeeze, they then got most of the investors, retail investors in this case, to buy the stock. So what happened really is that because the power of using options when you're buying shares is that they tend to lever your position. What I mean by that is that say you've got $1,000 to use, but using leverage and core options as they did in this case, you can buy something that's worth more than perhaps 10,000 times 10, what your capital actually can afford. So because of this power of leverage, you can have, say in this case, about 1 million investors, each putting in 1,000. And if you lever that money, you are looking at a buying power of almost 10 billion. So this has got impact on the market. So that pushed the price quite high. Okay,
and Gamestop wasn't a share that traditional investors, the big boys, liked. I mean, they took the opposite bet. But if it's Game Boy, I mean, it can be something else in any other country. I mean, are we at risk of this sort of attack here in South Africa?
It's possible, because these things tend to catch on, because what we've also seen after this GameStop specific scenario, we've seen that in Europe and also in Australia. I think in Australia specifically, there's a counter with the same ticker, GME, which also saw a spike after, because investors were confusing it with the GME, which is the GameStop in America. So it's something that can actually catch on, and if investors globally see that there is money to be made from this kind of situations, it's something that can definitely catch on. And
okay, and what impact on a market then? I mean, can it crash the market? I mean, how far can it go?
It really depends. The market is always a very strange thing. So in this case, what they then did was to try and limit trading on that particular stock, which in that specific stock, you would say it sort of crashed the market. But overall, I think it's how we can learn from this as investors, both institutional and retail investors. I don't think it will eventually crash the market, but more likely we will learn a lot from this. Something that we can implement in our trading strategy.
Okay, good. Thank you very much for talking to us. Fascinating. Let's take a quick look at